All right, Bulls and Bears back with another dose. We've got a lot of good news. Well, good news to some, maybe not to others, but I'll let you decide. A lot of information to unpack today. A lot of insane stuff to talk about here on economically, financially, and how it affects all of us as people trying to make it in this world, in the U.S. Specifically. But a lot of the stuff that we're going to talk about today is global because the system of money is pretty similar in most countries, the way money's loaned out. We'll get into more of that later. But first, the biggest news here is the lowest approval rating in 80 years in the first 100 days. And a lot of this has to do with the economy and the cost of living and how we were promised that, the economy was going to turn around on day one. And there's multiple things that people are upset about here. We see multiple articles here. Lowest approval rating, 80-year low. That's, being reported around the horn here, around all these different outlets. And a lot of it is people expected the cost of living to come down, right? You saw prices continue to go up with inflation not being negative, not deflation, but more inflation. And here's a couple of things here that kind of talk about that here. USA Today put this out here. He promised an improved economy on day one. Americans are still waiting. Now, of course, from the right side, the people on the right, they're going to say, well, it's only been a few months. You got to give it more time. And I said right here, just wait, and things are not going to improve, folks. Home unaffordability is still very high, even though prices have come down. I'm going to get into real estate here in just a few minutes. But what do you think about that? The lowest approval rating in over 80 years, or about 80 years, in the first 100 days of the administration, right? So what's going on? Is the grass going to be greener on the other side? That's what we're being promised. We have to go through some turmoil, some tough times before things get better. I think that's true, but I think the length of the tough times and the length of the turmoil, how long this is going to last, is going to be longer than a lot of people wanted or expected here. But let's go ahead and get into some other stories, some other news here. And we're going to talk about this new supply shock warning, more warnings of empty shelves, shortages. Is it just a lot of like headline grabbing type of news, or words in the headlines that are really not going to happen? Is there not going to be a crisis or a massive empty shelf situation or a supply shock? Well, we'll talk about that, but that's what's being reported here. But first, let's talk about this. And jumping into real estate here, a starter home now, this is out of Fortune, a starter home costs $1 million now in 25 of the 50 states and half of the U.S. states. $1 million starter home. How insane is that, people? So younger people just now getting into the home buying opportunities, or looking to buy a home, really have, $1 million starter home. Come on. And we told you here the housing bubble wasn't going bust. The home prices are down from the peak, but people have to go into massive debt now to buy a home on average. And I say most people. Now, of course, you still have a lot of super wealthy people out there buying homes, and that's one of the problems, right? So you go to buy a home, whether it's a starter home or second, third home, whatever, you go to buy a home, you're likely competing against a bunch of really wealthy investors and cash buyers, right? So we got the top 10%ers out there scooping up real estate like never before. And we see the home ownership rate not increasing, meaning only about 60% of people actually own their homes. I think it's up to 64% right now. Here's how they put it here. Buying a starter home as a first-time home buyer is supposed to be exciting and a recognition of financial security, but more in the U.S., the cities are getting more expensive, and the starter home is out of reach given the $1 million barrier to entry in hundreds of cities, which is now making up about half of the U.S. states. A new housing report reveals the hurdle to becoming a first-time homebuyer is now even higher in so many of these cities. And it's pretty interesting because places that were once affordable, we're now seeing a bunch of people not only rush to those areas, but now investors are trying to beat them to the punch and go in. Here's an example in a state we've talked about here many times that's pretty affordable, over in the Rust Belt, Ohio. And it's being reported out of the Journal here. The battle of the home buyers versus investors is making Toledo a housing gold mine, right? One of the few affordable states is Ohio. Let's see here. And it talks about a city called Ohio City. The struggle to find a cheap house in America is transforming some places with lower priced homes into battlefields, pitting Wall Street landlords and other investors against traditional buyers. Now, that's been going on a lot. We see the average home put on the market here in California gets between 10 to 20 bids, and usually half of those are investors or cash buyers. And it's talking here about how a Toledo, Ohio home is about $200,000 below the median price. And we know the median price is a little over $400,000. So you're looking at between $200,000 and $250,000 for an entry-level home there in Ohio, especially places like Toledo. And now with home prices out of reach for so many people, there's people looking to alternatives. Of course, a lot of people getting roommates and just renting, or just renting and not getting roommates, but barely scraping by in most cases. People going to mobile homes, modular homes, in trailer parks where they don't own the land, and then they just keep jacking up the price of the land or the lot rent for the land that you're on, even though you some cases own your home, you don't own the land. So it's just like paying rent. And then the people that own, they're having difficulty now paying taxes. Look what's happening down in Florida with the property taxes. They're talking about major changes to the way property taxes work in Florida because so many people just can't afford it, especially now with the price of insurance going up so high in places like Florida and other states with a lot of natural disasters. They're trying to find new ways to keep people solvent and to keep this whole thing from pushing so many more people into poverty. They're coming up with new schemes and new ways, new rescue programs and changes have to be implemented to help people. And one really obvious recent example is what's happening down in Florida. Florida is considering eliminating property tax as a proposal championed by the governor down there. And this would require a constitutional amendment, which needs 60% voter approval. In the meantime, the governor has proposed to immediately implement property tax relief for homeowners with rebates averaging $1,000 per household. And again, if people weren't struggling, they wouldn't need to even be talking about stuff like this, right? So when you hear, oh, the economy is good, the economy is great, the U.S. economy is the envy of the world, for some people, yeah, for the top 10% especially, and you can expand that out to the top 20, maybe even top 30%. But most people, the whole 70% number that still is out there, which has actually gotten worse. I think it was like 73% the last time we looked at it. The people living paycheck to paycheck, that's 73% of people. But even a lot of those people, if you ask them, they think they're doing okay because it's considered normal now just to be in debt for life, to live paycheck to paycheck, to be dependent on each paycheck just to pay your monthly bills. So you don't get your light shut off, so you don't get your car repossessed, so you're not late, so your credit score doesn't get beat down, you know what I mean? And back to Florida for just a second here, the whole property tax thing, I mean, when I see this happen in other states with different types of taxes, like the states that don't have income tax, it just seems like the other fees in the state are a lot higher. The vehicle licensing fees, they just make up for it in another area. A lot of toll roads in places like Texas. And to me, it just seems like you're filling in one hole and emptying another hole and filling in another one because it seems like the cost of living just gets passed along somewhere else. You know what I mean? When they try to eliminate something, it just means they're going to have to pay for it somewhere else. And more polls of consumers and consumer sentiment continues to show the negative outlook and the negativity on the economy. The most recent one was the Michigan one. We talked about, 1 or 2 reports ago about how that dropped, I believe, to the lowest since the onset of the health crisis. And we've got stories out here like this. Americans expect the economy to sour. When I first read this, I thought it said soar, but no, it's sour. So one letter makes a lot of difference. It's not soar. I was like, soar, what do they mean? But no, sour. Here's when the data could show it. So right now the numbers are really not showing it, right? Unemployment's not spiking, even though it's headed higher. It's not really spiking. Americans are feeling increasingly downbeat about the economic outlook. Some Wall Street economists believe the U.S. will enter a recession this year, but most economic data isn't flashing red just yet, leaving a pressing question as to when the ominous sentiment showing up in surveys will actually translate to a hit to growth. Now, pretty much when they finally declare that there's a recession, it's when growth slows for 2 consecutive quarters, right? And when they say growth, they're talking about basically people running up debt. So, right, so this is all going to be dictated and controlled by the banks. If the banks can keep loaning out money, then the economy is going to continue to look like it's growing because debt will continue to increase, right? Spending is 70% of the gross domestic product number that determines if there's a recession or not. So this is all based on debt and the banks, folks. So if banks keep loaning out money, you won't see a recession. If enough people start defaulting, maybe the banks will start tightening their lending. And then obviously that's got to cause a slowdown in spending when banks tighten. And then that's when you'll see a recession, right? So it's all based on what the banks decide to do. And so far, we've seen delinquencies increase. More people are not making their payments on time. We see 90-day delinquencies in car loans at a all-time high. We see delinquencies in other areas starting to increase, late rents increasing, late credit card payments, all these things. And banks have not reacted with any sort of tightening measures, broadly speaking. Now, there's a couple banks here and there that are tightening, but when you look at most of the banks, most of them are still not tightening. And in fact, why don't we just bring up a chart here? How many banks are tightening? Well, we've got this side here out of the Fed data here, the Federal Reserve Economic Data reporting here. Net percentage of domestic banks that are tightening. Well, we saw a big spike after the onset of the health crisis there in 2020. We saw that banks initially tightened. It got up to about 70% in the third quarter 2020. It was really hard to get a loan. If you remember, you're looking for a credit card or trying to get a car loan. At that time, during that time frame, it was very difficult. But of course, that didn't last long. We see what happened. We saw a record number of banks loosening after that because they wanted to stimulate the economy. So I think the word was sent out, or the message was sent out, the memo was sent out to the banks saying, hey, you better loosen your guidelines. You're going to be propped up no matter what. Don't worry about it. Just loan out money. And of course, they really loosened it there in 2021. Then it started going up again. Banks started tightening a bit. It got up to almost 40% in the third quarter, 2023. If you're looking at the chart, I'm hovering over it right now. But then what's happening here over the past couple of years now is we are loosening again, right? So the banks tightening has decreased, and now it's down to only about 9.4% of banks are actually tightening. So what does that mean? That means over 90% of banks are loosening and making it easier, or continuing to make it easy, to borrow money. And we go over to a gross domestic product chart, which is basically a gauge of how much debt is being accumulated and how much money is being borrowed into existence. We see the GDP number continue to explode to the upside, which is looked at as economic growth. So we live in a world, folks, where people running up debt and buying things they can't afford is looked at as economic growth. I mean, make it make sense. It's kind of like a 2 and 2, 2 plus 2 equals 5 kind of thing to me. It doesn't make any sense, but that's what's being used as the number to gauge if the economy is doing good or not. So in this case, good really means bad, in my opinion. Everything's just the opposite. It's flipped upside down. It's backwards. It's inside out. All right, but moving on to some other news here, folks. We've got the office vacancy rate in the U.S. just got worse, and a lot of this has been because of these federal jobs being cut, and now a lot of these office buildings, these federal buildings, are empty. Now, it was already bad ever since 2020 when companies started sending people home. We had the work-at-home craze, caused a lot of vacancies and empty commercial real estate. Well, it just got worse now, and Wolf Street's reporting it, where it's almost 25%. Office vacancy rate in the U.S. worsens to a record. It's a new record, folks. First quarter 2025, 22.6% amidst these lease terminations in federal buildings here. It may take a while before these federal lease terminations work their way into the CRE delinquency rates. So even without all the numbers in, we're still over 22%. So nearly 1 in 4 commercial real estate buildings are vacant. That's a new record already, and it's likely going to get worse because we still have offices being cleaned out here as we speak. Every day there's new reports about this agency's getting cut, that agency's getting cut, and certain agencies are fighting against it, and a judge said this agency can't be shut down. So it's a lot of back and forth, a lot of continuation on this that we'll have to follow up on, but it's looking like it's going to be 1 in 3 offices before this is done. 1 in 3 offices, maybe even 1 in 2 office buildings are going to be vacant before this is all done. Can you imagine 50% of all office buildings throughout the U.S. being vacant? Right? You would imagine that that would cause the price of commercial real estate to crash and the cost of leases to crash, because if you're trying to lease out a building for a business to open up in, and there's all these vacancies, you're going to have to lower your prices here. So I guess that could be good news in the future for someone that wants to lease a commercial space to start up their business or to run their business out of. So we'll have to see how this plays out. But if you talk to most small businesses, it's not payroll that gives them the biggest problem. It's the lease and the cost of the lease for their office space or for their retail space, for their business, right? So it would be nice to see prices come down, because when leases come down, then the business doesn't need to charge so much to stay in business. Maybe they can come down on their prices. Everything from your local food place to movie theaters. Not that there's many movie theaters left, but all these places that have to pay their lease are going to have to incorporate that into the price they pass along to the customers. And we're finally seeing the price increases too pass along from the retailers to the consumer from the tariffs. I just talked about in my last report, I went out and bought a few things where the tariffs are going to kick in. And so I bought them like on the 24th, and I checked back on the 25th. I didn't really see prices move up that much. Today's the 28th as I'm recording this, and I'll check back to see if prices went up. But I bought a few things. I think I talked about that 1 or 2 reports ago to try to get ahead of the tariffs. Nothing major. I spent less than $500, but things that I knew were imported that I had on my wish list or my shopping list that I went out and bought. Pulled the trigger on it, basically. Let's move on here, folks. Though another sign of the times is we have this trend in Asian countries now coming to the U.S., and now in this case it's in Hawaii, and this is a pod living type of situation, or pod hotels. And in some countries they have these pod apartments where it's basically big enough to sleep in, and that's about it. But now it's actually come to Hawaii, and this is a hotel, and look how small these things are. Hawaii Pod Hotel hopes to attract Japanese tourists back to the islands. So they're trying to attract these people that are used to this pod sleeping type of situation, but I think it's going to become more and more a trend as things get so expensive here in the U.S. Look at these sleeping pods. And this is Hawaii. The premium economy cabins at First Cabin International Hawaii are stacked, one on top of the other. So basically it's a bunk bed situation, but you're going to have some stranger sleeping above you. That would just be kind of weird, wouldn't it? Not having your own room. And you would think something like this might be $20 or $30 a night. No, $120 per night, folks, to sleep in basically a glorified bunk bed. Would you pay $120 to sleep in a situation like this where it's not really a hotel? It's more of you feel like you're in that to me reminds me of like sleeping in like an RV or something like that. That's what it reminds me of. $120 a night. And they have to share a lot of the amenities. Here's the little tables out there. And here's some of the bigger rooms, I guess. Some of them are a little bit bigger. That one's probably $300 a night. Who knows, right? Some of them are 47 square feet. Wow. Some of them are 27 square feet. Different sizes there. Looks like a smaller one there. And then you have communal bathrooms. You don't have your own bathroom, obviously, so you have to go wash your hands next to a stranger, kind of like you're using the bathroom at a restaurant or something like that. Communal kitchen where you're sitting down and eating with strangers because you don't have your own kitchen. The only real downside is the parking. Wow, so it gets even worse. Now you got to pay for parking too. The business plaza has parking, but it's priced $3 for 30 minutes or $75 a day. So now 100 and something dollars for a pod, you got to add in another $75 for parking. Wow. In this case, it may be better to forego a rental car while staying here or search for cheaper parking elsewhere. Wow. So some of these people going on vacation, it's more like they're going to prison. I mean, come on, this is a insane way to spend hundreds of dollars on a vacation. One more thing here before we wrap this up, folks. California is so overcrowded, so many cars on the road here. They're running out of license plate numbers. They had to change the way license plate numbers are actually issued, and there's coming up with a new license plate sequence. Right? We were told for years that people were leaving California, that everybody's moving out, but I haven't noticed any more open roads or any less crowded places. I mean, some of the retail places that I go to are pretty sparse. Like the mall, I went to this mall today in El Cajon here in my neck of the woods here in San Diego. It's about maybe 7 miles east of where I'm at. I'm in La Mesa, and that's over in El Cajon. And it was dead for a Sunday. This mall was dead. Now, it's pretty nice weather here in San Diego, so a lot of people are at the parks and outside and around the country. I mean, spring has sprung, right? It's late April, so I think the snow melt is pretty much happening in pretty much every state, right? Am I wrong? Am I right? I think when I lived in Michigan, April was the month that you could definitely always see the grass. Sometimes in March, but April, definitely the grass started appearing, snow melting that time of year, folks. But what do you think about all this? What do you think about this lowest approval rating in 80 years? The economic promises that things are going to get easier, but people aren't seeing it. Now we've got the fear of even more price hikes coming, higher price levels coming, and more unaffordability in the housing market, where you have now half of the states with $1 million starter homes. That's crazy, folks. And not every city, but in most of the biggest cities, it's $1 million starter home. And half the states is what they're reporting. I mean, is that correct? Let me know what you think about this down in the comments. And what happens on the other side, folks? Is the grass greener, or is this nothing but a nowhere but down situation? Let me know what you think about all this. I'll be reading. Thanks, everybody. As always, keep stacking. We'll talk to you soon. Bye for now. Peace. Peace.